Where is all this money flowing back to? It's all flowing back to AI chips and servers, data center construction, networking infrastructure, power and cooling, storage and memory. But the main two are AI and chips and servers, so your GPUs and your CPUs. That's my NVIDIA position. That's my AMD position. Data center construction. That's my NetBS exposure. If you all want to follow my stock investment journey, I have a public portfolio that I share with you guys. On the week, we're up or down 2%. On the month, we're up 24%. On the 3 month, we're up 45%. Year to date, we're up 30%. You see, I have shares in NVIDIA. I have shares in Meta. I have shares in AMD, SoFi, Zeta, Nebius, and ELF. You know, this is real money. I show you guys in real time, like what I'm doing with my money, any trades I'm making. This is just to show you all what I'm doing. Yeah, like April 1st, I dropped this Substack, link in the bio. So if you're interested in reading this, you know, scroll down, link in the description. This Substack was positioning for the AI revolution, how I am structuring my stock portfolio after ChatGPT, breaking down the AI stack, hyperscaler spending, and how I'm positioning my portfolio for the next decade. If you was on it and read this around this time, a lot of the companies I called out in that article are up 100%, some 200%, like some 300%. AMD went crazy at that time. AMD was still at 200 at that time. What's up, fam? Welcome back to JRuss TV. If you're new to my channel, hit that like, comment, subscribe button, man. We cover all things business, investing, and self-improvement content. That's something you're interested in? Leave a like, subscribe. Let me know what y'all think. If you're returning to the channel, appreciate you tuning back in. You already know we back on another banger. As y'all can see by the title, AI CapEx keeps increasing. Let's go back to the artificial intelligence, guys. Artificial intelligence, AI. That is what's gonna make the next millionaire. This is our wealth cycle. If you haven't checked out some of my old videos, definitely tune in to some of these videos I'm gonna show y'all right now to give y'all a little bit more context of what I'm talking. So this one right here, I just dropped it. Trade of a lifetime. AI compute equals wealth. Go check that out. Go check out some of my stock portfolio videos as well. I give a lot of good details as far as just my overall thought process on this AI trade, but it's going to create a lot of different wealth over the next 10 years. AI is improving productivity, not only for ourselves. I know y'all see it with ChatGPT, and that's the main one most people use AI for. But companies are using it as well, and they're seeing a good ROI on artificial intelligence. And that's why they continue to spend money on artificial intelligence, which is CapEx. So CapEx is essentially the money that businesses spend. I'm just gonna go ahead and to basically fund their endeavors, their investments. So right here, CapEx is the money a company spends to buy, upgrade, or maintain physical assets like property, buildings, technology, or equipment. It represents a strategic long-term investment meant to boost a business capacity or generate future economic benefits that extend beyond a single fiscal year. So that's CapEx. Now, Jonathan, why is this important? This is why it's important. This is recent. This dropped in the past week, guys. So Alphabet, if you're not familiar, Google, they own YouTube, they own Google Search, they own Chrome. They have cloud services, they own Waymo, a very, very good company. I'm pretty sure most people are familiar with Google. What did they just do? They plan to raise $80 billion for AI goals. Berkshire to invest $10 billion. Google is looking to raise $80 billion in equity offerings, including an investment from Berkshire Hathaway, Warren Buffett. Well, he don't run it no more. Someone else runs it, but that's Warren Buffett who founded it. The Google parent said on Monday in its aggressive push to fund costly expansion of its AI infrastructure. The deal brings in Warren Buffett Diversified Holdings as a major new investor, adding a high-profile endorsement of Alphabet long-term AI and cloud strategy. In its aggressive push to fund a costly expansion of AI infrastructure. Alphabet raised its annual capital spending forecast by $5 billion, between $180 billion and $190 billion in April, ramping up investments to capture growing AI-driven compute demand with its business AI tools and custom chips. The Google parent will sell 10 billion worth of shares to Berkshire Hathaway in their private placement at a discount, pretty much. So this is what they said. And then shares fell because a lot of companies don't like diluting shareholders. But I'm gonna get into that after I finish this, though. All companies are thrilled when Berkshire takes positions because it is the kind of shareholder that companies like to have. Okay, here we go. Right here. This is the key point right here. What is on? The company is experiencing strong demand for its AI solutions and services from enterprise and consumers at levels that are exceeding the company's available supply. So, most companies that dilute are early stage, newer, younger companies. So when you have a Google that's a $5 trillion company, you know what I mean? You have a Google company, a company like Google, down 5% on the week, on a month they're down 6.5%, 3 months or 21%. But Google is a $4.5 trillion market cap company. You know, they do, how much free cash flow does Google do? They generate 64 billion in trailing 12-month free cash flow. However, this figure is currently compressing due to aggressive capital expenditures. But they do about 6 billion in free cash flow a year. They said we need 80 billion. We need an extra year's worth of CapEx to spend on the AI infrastructure build out. This is crucial. This is very, very, very crucial. Now, if we go back to my Substack, I highlighted this. I dropped this Substack. I dropped this Substack March 30th, I believe. Yeah, like April 1st. I dropped this Substack, link in the bio. So if you're interested in reading this, scroll down, link in the description. This Substack was positioning for the AI revolution, how I am structuring my stock portfolio after ChatGPT, breaking down the AI stack, hyperscaler spending, and how I'm positioning my portfolio for the next decade. If you was on it and read this around this time, a lot of the companies I called out in that article are up 100%, some 200%, like some 300%. AMD went crazy at that time. AMD was still at 200 at that time. You know, AMD was still at 200 at that time. Nebius was still 80, 90 bucks. Bloom Energy was still in the high 100s, low 200s, I think. Nvidia probably in the 180s, 170s. So if you locked in, did a little research, I'm not a financial advisor, but if you just read through it and just took 2-3 companies to say, you know, I want to start my investing journey, let's see what happens. You could have made some solid, great bread. Not gonna lie. But yeah. So check that out. Link in the bio. But back to the CapEx spending and why this is overall just bullish and it's just bullish on the AI trade. But okay, so since 2006, everything transitioned onto the cloud, which provides on-demand access to compute resources for storage, applications, and processing power over the internet, pay as you go. So this is your software as a service. They might be running it, hosting applications, databases, automatic backups, your iClouds, your storages, all that goes to the cloud. This was this big boom that happened. Now we're seeing a new type of cloud specifically for AI. But AI lives in the cloud, and this industry is on track to exceed 1 trillion in total market value by 2026 and is expected to double by 2030. Now, right now, the cloud industry is growing incredibly fast. I think what did I say? 29%. Well, Amazon owns 29%. But the major growth in the cloud is increasing adoption and demand of artificial intelligence and machine learning. So this is why Google is diluting shareholders. Equity dilution is the reduction in an existing shareholder's ownership percentage that occurs when a company issues new shares While you own the exact same shares, each share represents a smaller overall fraction of the company. So they're giving out shares cheaper, to raise more capital. Usually to do some type of build out or something like that. So you got these fundraising, secondary offense, employee stock options, convertible securities. So they're really serious to dilute shareholders to fund more CapEx spending, which was already a lot as it is, So you got to read between the lines when these companies are dropping this news. You got to read between the lines and be like, think a little deeper. Why are they diluting shareholders, making the stock drop to raise more money to invest in artificial intelligence? Because they don't have enough compute. Demand is still there. So it goes all back to my investment thesis, which, is in this article right here. But yeah, so essentially, AI is growing. The demand is crazy. I don't want to read this whole thing. You can read through it if you would like. Just want to highlight some of my points. Now, how I'm taking advantage of this was, one, Amazon exposure, which at the time was a 4% weighting in the portfolio, but I completely sold out my Amazon position. I took that capital. I added more to Meta. I added more to Nebius, and I added more to Zeta. I have like 3-4 hyperscalers, Mag 7s in my portfolio. I don't really believe I need that many, in all honesty. Between Nvidia, Meta, I mean, in my opinion, AMD is like that too. I'm not gonna lie. I'm considering AMD too. AMD is going to be a multi-trillion dollar market cap. May even be in the Mag 7. If this compute shortage is as well as it say. Meta, I'm investing in Meta to take advantage of this. Nebius, I'm taking advantage of this as well. Or Nebius, as Jensen is saying now. But the point I'm trying to make is that AI CapEx was continue to be spent, So if you're not familiar, Meta, they own your Instagram, your WhatsApp, all those things. And I think they'll be able to monetize AI. One of the best because they have access to over 3.5 billion monthly active users between all their applications. Nebius, they have the inference layer. They have the full stack layer, the inference layer, the bare metal layer, and they have the networking layer. And they just have a whole bunch of different investments and a lot of different stuff, but mainly bullish on the deals they have with NVIDIA, being able to get early access to GPUs. They're seeing an increase in demand, all that type of stuff, which essentially powers all of this. Because these hyperscalers are spending money on data centers, chips, all that type of stuff. So right here, this is in March, like I said. So 2026 CapEx budget shows the hyperscaler spending CapEx trends, 100 billion annually, and the dollars behind the infrastructure arm race. And this is not cyclical spending. It's strategic positioning, and AI workloads will continue to require persistent investment. So this is just a photo. 2026 budget, Amazon was 200 billion, Alphabet was 180 billion, Microsoft 151 billion, and so on and so on. Now you can see this is just growth year over year. Like Amazon, crazy. Alphabet, double. Dang, 28%, 73%. Meta been a double. Yeah. Between Meta and Alphabet, they're spending the most in Oracle, So it means something. Don't take this blindly. I tweeted this out February 6th. Roughly 600 billion in CapEx on AI/cloud across the major hyperscalers now in 2026. My AMD, NVIDIA, Meta, Palantir, Nebius position will benefit tremendously, which it has. If you look at them stocks from then to now, we definitely had a run. Then I want to just show you all another point I put in here. Since the inflection point of ChatGPT, CapEx budget exploded. Companies don't spend 50 to 100 billion a year casually. Most CEOs' interests are for business and shareholders, but once a lifetime opportunities that present themselves over time, such as their industrial revolution or cloud revolution, AI is a once in a generation opportunity that builds the railroads of the future generation, and it isn't slowing down. So as you can see right here, since ChatGPT 4 in March 2023, CapEx has increased $500 billion in 2025, bro. It's up and to the right, and it's increasing. You got to pay attention, guys. Got to pay attention. Now, where is this money going? Where is all this money flowing back to? Where is all this money flowing back to? It's all flowing back to AI chips and servers, data center construction, networking infrastructure, power and cooling, storage and memory. But the main two are AI and chips and servers, so your GPUs and your CPUs. That's my NVIDIA position. That's my AMD position. Data center construction. That's my NetBS exposure. If you all want to follow my stock investment journey, I have a public portfolio that I share with you guys. On the week, we're up or down 2%. On the month, we're up 24%. On the 3 month, we're up 45%. Year to date, we're up 30%. You see, I have shares in NVIDIA. I have shares in Meta. I have shares in AMD, SoFi, Zeta, Nebius, and ELF. You know, this is real money. I show you guys in real time, like what I'm doing with my money, any trades I'm making. This is just to show you all what I'm doing. This isn't financial advice or anything, but all the time I'm up 100% in this portfolio. And we just getting started. I can definitely see 2, 3x, and 4x's portfolio over time. I didn't even realize I'm up 100% all the time. Year over year, I'm up 80%. So a lot of my gains was from that tariff lows. If you was here in the channel last year, you know them tariff lows was a generational buying opportunity. But I don't want to hold y'all too long. CapEx spending is continued to increase. We need to pay attention to this because it's going to affect all the investments that I'm in and you all as well. Be watching the video. So make sure y'all like, comment, subscribe. JRuss TV. It's insane. Millionaires will be made.